Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking for a double 1, 2, 3, 4, 5 to finish a green 3, then we have green 4 and 5 for higher prices to come. Common target for a wave 4 taken from the low of 2 to the high of 3 is between the 236 and the 05, meaning between 35.3k and 32.2k, and currently we are finding support on the 236. What's also common for a wave 4 of a higher degree is to retrace to a wave 4 of a lower degree, which is then the sub-degree wave 4 of this blue wave 3, with then in wave 3 a 1, 2, 3, 4 and then a wave 5, meaning we want this blue wave 4 to find support on top of this range over here, which as you can see is in confluence with the 236 as well as the 382. An invalidation for this scenario is if price would move towards the downside without taking the high and move towards the golden pocket over here at 30.9k. Time-wise, a wave 4 tends to be longer than a wave 2. You can see two vertical lines on the chart. These are fib times taken from the high of 1 to the low of 2, put on top of the high of 3 to compare the length in time of wave 2 with the current time it takes for this wave 4 to form. Preferably this wave 4 is longer than the 1-to-1, sitting at 1 p.m. on Saturday, but a wave 4 can definitely take a lot longer, even 2, 3, maybe even 4 times the length of wave 2, so we have to observe locally what we get. In the bearish scenario, we're looking for the green count to finish soon and then a 1, 2, 3, 4, 5, finishing a green 5, and then we can expect a bigger retracement to the downside and then a wave 1, 2, which can easily go to the golden pocket 786 area, meaning all the way down here before then continuation, or you're looking for more downside if this instead is a wave C. If we then zoom into the lower time frame over here and we're looking at the 30-minute, then yesterday we were looking at this being a three-wave structure to the upside, right, and then a wave A, B and a wave C. Wave C ending in the common target for a wave C as well between the 1 and the 1.236, taken from the low to the high of A to the low of B, which was very nice as well. And as mentioned, right, probabilities were higher for a move to the downside, and to be more like secure or get more confidence, bearish CVDs were very nice to see, right? And we actually got some bearish CVD divergences during this candle over here. So price started to lose this range over here, right? We had the point of control here. We were ranging on top of the support resistance area. We had the value area high, price moving down. But in this candle over here, on top of the point of control, price started to create bearish CVD divergences with this high, giving extra confidence for a move to the downside, where now we found some support, and you'll see in a second what support it was. For now, at least a bit of a bounce towards the upside. And because of the increased probabilities for this being an ABC and the higher probability of a price moving down, we also thought about this flat scenario over here, where you're then looking for a wave A, B and a wave C, where this can be a WXY, ABC, and then you're looking for a 5-wave move to the downside in a wave C, 1, 2, 3, 4 and eventually a wave 5, with the most common target for C being between 34.7k and 33.9k, where the invalidation is if price would move towards the upside right now, it's the invalidation without taking the low of A first. Now, if we are looking at a 5-wave structure to the downside over here, we look at this scenario over here. In this scenario, we are looking at the blue count as the bigger 5-wave structure in a wave 1, 2, 3, 4, and then a wave 5 to the downside. Wave 2 retraced to the 0.382, which is a less common target for a wave 2 and a more common target for a wave B or a wave X, which in this case would then be a wave B and a potential 3-wave structure to the downside. Inside this wave 3, we're then looking for a 5-wave structure, 1, 2, 3, 4, 5-wave move, where again, you can see the white box over here, a wave 4 of a higher degree, meaning the blue wave 4 likes to retrace to the wave 4 of a lower degree, which is the white wave 4 over here, for then a rejection and continuation to the downside, where currently the targets for a wave 5 are over here, sitting between 35.2k and 34.8k, which is just above the target area for a wave C. So there is a little bit of confluence at least between the target area for a 5 and the target area for a wave C. But if we look at the support areas around this area, Then we have this white box over here, right, which acted as support once, but we have to break this white box moving to the downside, where if we look at the next support area, it's kind of this blue box here, 34.3, 34.4, and then below we are 33.8, 33.9, which of course is far below this wave 5 target area over here. Now, if we look at this wave 5, you can see I wrote a little bit of text here as well. Wave 5 equals wave 1. Now, in an impulsive structure, what you like to see, 1, 2, 3, 4, 5, where wave 5 and wave 1 are usually quite common in length and time if wave 3 is the extended wave. Now, wave 3 over here went to the 3 trend-based fib extension, taken from the high to the low of 1 to the high of 2. So wave 3 is extended. But then you like to see a wave 5 that is quite similar in time and price compared to wave 1. But as you can see at the moment, price is taking a very long time to move towards the downside. If you take a fib time from the high to the low of 1, put it on top of the high of 4, you can see we almost already reached the 1-to-1 over here, meaning this structure is almost the same amount of time as this wave 1, and we are not even close to the wave 5 target area, which is lowering the probabilities. Now also for a wave 4, the 0.5 is the maximum target. Don't really like to see candles close above the 0.5. Can happen though, especially on the 1 hour. You can see it is a wick, so maybe okay, but it's not preferred. And the invalidation is very close, officially the 618. But hey, if we close candles above this high over here, probabilities are high. You're going to move to the golden pocket and invalidate a wave 4 as well. Now on the other side, we then have this triangle over here, A, B, C, D, E, right? 3-wave structure A, ABC, in a wave B, a zigzag as well. And then you're going to be looking for this move to be a 3-waver. This is the most common target area for your wave C as well. Over here, the 786 to the golden pocket area. And then you're looking for a wave D, E, and eventually continuation to the upside. Now for a wave D, if this is the high of B and this is the low of your wave C over here, then I can pull this a little bit lower and we can see the target area is between 37k and 37.4k for then the high of this wave D, where preferably wave D is then also either a zigzag, a 535, or at least zigzag family, where you can also have a double zigzags or triple zigzags. But this area is an area of importance. And if we're looking at a triangle, that means that this move to the downside has to be a 3-wave structure in an ABC. Now, as mentioned earlier, this wave B over here retraced to the 0.382 in this case, right? Which is nice for a wave B. And then you have a 5-wave structure to the downside for a wave C. Quite extended wave C, especially going to the 3 trend-based fib extension, taken from the high to the low to the high here. Finding support on this daily, very nice indeed, which also, by the way, was the same level as the point of control of this little range that we had over here, for some volume support as well. So a nice area of confluence for now a bounce towards the upside. Because in a triangle, wave A has to be a simple zigzag structure in a 535. It also opens the possibilities that this then becomes a WXY, within W a zigzag over here, ABC, X zigzag as well, which is common for an X, and then wave Y has to be a triangle or a flat. Now it's too early to call a triangle over here, right? We only got one wave in, but it is something we have to remember also with the weekend coming up, which tends to be ranging indeed. Or we have to think about a flat and then a wave A, B, and then a wave C to the downside. These are the two options for wave Y, because a wave Y is not allowed to be the same as wave W in a sideways double combo. Now this is the range that we are having at the moment over here, right? We lost support resistance, lost the point of control, moved to the downside, found support, but now we actually got back into the range again, above the value area low, a little bit of a retest, above the support resistance area. As long as this holds, probability is higher for a move towards the upside. We had some bearish CVD divergences as mentioned over here. These already played out locally a little bit as well, also already played out. So currently CVD is very neutral. And if we then look at the probabilities of the different scenarios, and on the medium time frame, we're looking at the bullish scenario. On the low time frame, however, in this range over here, looking for the complex or the triangle scenario, meaning that the probabilities are higher for this to be a low for a while and at least move towards the upside over here, which basically changes if the support resistance fails. So probabilities change if price is going to move below this area to the downside, of course. Then we have to look at the potential flat. But hey, for a wave 5, it's taking very, very long compared to wave 1, lowering the probabilities for a 5-wave move. Also wave 4 retracing very high, closing some candles above the 05. We're currently above support, found support here as well. So yeah, probabilities are higher for a move towards the upside and for the range to continue. And if support resistance fails, we're simply looking to the downside, right? Trading based on what we see on the chart. But the general conclusion again, ranging between the high over here, 38k, and the lows that we have over here, probably throughout the weekend as well. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.